This is a very indeterminate open, and well, it should be, given the run-up that we've had and the anticipation on the Fed meeting. Let's take a look at sectors. You can see here, not too much going on overall here. We've got banks, semiconductors, industrials doing a little bit better, consumer discretionary stocks, energy stocks, a bit on the downside after a great run-up the other day. Here you can see, and I'd say this is fairly indeterminate open overall here. This is one of the toughest setups for a Fed meeting I can recall in a very, very long time. Just consider what's happened running into this thing. So we've got a dovish European Central Bank, widely commented on. We've had a Fed that is expected to be dovish or signal dovishness. We have China trade talk optimism that's starting to get rather extreme at this point from the other side. And then we have markets 1% from record highs, 1% from record highs here. So just take a look at the S&P 500. We've had a mini melt-up going on in the last several weeks here, right here, to that 1% high. Just off the 1% high. We've had it not on fundamentals. We've had it on anticipation of trade talk optimism, and we've also had it on anticipation of dovish central banks, which so far has been materializing. That's why we've got this. But the risk is very much to the downside now. Powell's got to thread that needle exactly in the middle. Economy's still strong, but we're vigilant, and we are ready to cut rates, or imply that they're ready to cut rates at a moment's notice. That's a very fine needle to thread. And the market could go down very easily just on a comment or a misplaced comment. So I think the risk is to the downside right now here. How about fundamentals? How about commentary from corporations? We haven't talked about that a lot, but just what's happened in the last last 24 hours. We have two big companies out making comments. Lazy Boy had comments this morning here. They had guidance earlier in the month here, basically saying things were going to be down. The stock's been down, but they talked about concerns about tariffs and geopolitics. U.S. Steel, these steel companies have been terrible recently. Nucor had very disappointing comments earlier. Now U.S. Steel is talking about softer demand out there overall, as well as trade issues. The softer demand is on fundamental weakness, not just trade weakness. So there's a lot more going on here than trade and tariffs, but they've had a very tough time. Take a look at how these stocks have reacted today. Lazy Boy down, but remember there was some Lazy Boy's up. I'm sorry. There's guidance in the early part of June. They gave downward guidance, so the stock's been down rather notably in the last few days. U.S. Steel up a bit today, but don't kid yourself about what's going on here. This stock was almost $40 in the middle of last year. These steel stocks have essentially gone nowhere but down and are essentially very tied to the overall trade issue. Finally, we're waiting for Slack tomorrow, and that's going to be a big story. I'll be right over here talking about it. But one of the biggest ones this week, Grocery Outlet Holdings, up the terms of their offering last night, and what we are seeing here is continued upward revisions in some of the numbers for these IPOs. So we'll keep an eye on that, but the IPO Lollapalooza, let's call it, continues.